Vega, we cool.
Good morning, everybody. Afternoon. Evening? Depends where you are. No, this was not a choice I made. I was trying to fix my camera, and I've run out of time. So now I'm this color. Thanks. Yeah. How's everyone doing? A month or so ago, you said someone had made you some macros that tightened up your sell limits on trades based on volume. Was that on Webull or a different trading platform? Oh, it's on IBKR. I don't think you can program like conditional orders on Webull. If I Yeah, I don't think you can. Maybe? As far as I know you can't. Like there's no custom script thing. It's not a prophecy. I just don't know what I did to my camera. It was worse before. Half of my face was like anywhere where light was hitting me was just invisible. And now I've ended up fucking green and my chair's red, which is not the case. So I really don't know what's happening. Too much pickle juice last night? I didn't have any pickle juice last night. Weeble has like iron like auto iron condor entries and stuff. But like I don't think they have any like scripts outside of the ones that they write. Like they'll buy all the options for you, I think. Or you can like put them in as one order. Thanks for that, Dan. And you're welcome. Fubo analysis. What's your next week prediction? I'm stoked on Fubo. I don't know why the fuck he keeps going up, but that's a sweet ass bounce, right? I mean this looks a lot like it's gonna maybe move back up into like the $8 range. It's gonna probably be slow. There's probably a lot of bag holders, especially after this drop at 450, that are probably waiting to get out. But I think, yeah, given enough time, this accumulation that we're seeing is going to continue, and we'll start to see some pretty good price improvement on this. It's not too expensive yet, and there may be some pullback on a like retest of 450. But it's not showing a lot of weakness. Very consistent volume and rising price. I know a lot of people are worried that they missed, like the sub $4 entries. It's just $1. Over 1,000 shares, that's 1,000 more dollars. But I think puts are still slightly favorably priced. There may be like some CSP opportunities, so you could get shares at 4 or just under 4 on assignment. How tied to the SPY is Fubo? It's really liquid, and its ETF holdings are fairly significant. Unfortunately, like we only have the last reported 13 Fs, but I can tell you what that looked like. So about in its biggest ETFs, it's like roughly 10 million shares. Um, Lots of institutional ownership too, which has been increasing pretty steadily since December. Like it was up in December, down a little in March, started to climb in June, and now it's like institutional ownership's way up. I know Comcast sold their position, which was a lot of the reason for like the big drop, but all the like big names are there: Vanguard, BlackRock, State Street, Two Sigma, Wolverine, Morgan Stanley, Susquehanna, Rentech, IWN, B of E, Goldman Sachs. They all have quite a lot of ownership. So I would say fairly strong, but there's a lot of accumulation going on right now. So even though, intraday, like intraday, you can kind of see like the active fund trading when the market drops. It's not nearly as strong as the buy pressure at these prices. Can colorblind people see you? I don't know. Would I look just gray or I'd be red? I don't. If you're colorblind, am I red? I don't know how that works exactly. I think it depends on the type of color blindness. People who are colorblind can still see colors, or well, they just don't see them the same way. I sold some Jamie September 1635 CCs last Wednesday. I'm down about 20%. So you think we'll see downs before end of Tuesday close? I have 30, 35, and $40 covered calls out right now. Most of the 40s I sold on Friday. I'm not super concerned with the price like running away yet. There might be some room up to 29. There's a little bit of like a negative hedge going, like, so the market maker is net short gamma going into this Tuesday. So there might be a little selling. I think they're gonna try to sustain pricing through like the Opex period. It looks really similar to like the like period right here before May Opex. Not the same amount of time, I don't think. Or maybe it is. Uh let's take a look. So that's the 25th and then 127 bars. That would be like September 21st. Yeah, that's like Wednesday. So yeah, very much in line with the May, like pre-May Opex period. Generally before Opexes, there's another really good indicator that what's gonna happen is that there's a lot of IV crush. So you get like they try to suppress IV, and we trade very, very tightly in a narrow channel. In March, after they slammed it, we still kind of stayed in, what's this, like $19 to $22, so not huge, but like a 10% range. It was much tighter going into May Opex, but most of like the pre-Opex periods have like a similar thing like that. We had this before November Opex. We had it before August. A little bit in two ranges here before June. You see it before March Opex. So it's pretty common for them to try to like stabilize price action in a narrow range, and it doesn't really drop IV very much, but it can keep it from rising. You mentioned this week that Fubo price movement can be institutional accumulation. What kind of PT would institutions have? I think like the analysis or like analyst ratings for Fubo are somewhere around like $6 and the 1 year price target. I've seen a few that vary. I've seen them as high as like 15, 16. I've seen them as low as like 580 for like the 1 year analyst predictions. I would say somewhere between like $8 and $13, which is kind of like where I was at. The prophecy has come to pass. The ancients foretold of the day the pickle prophet would ascend into his true form, and on that day he shall lead the disciples of VWAP into paradise. Oh, Jesus Christ. No. My camera's just fucked up. For wheeling GME, would this week be, before OPEX, be a good time to sell CSPs? Like 0.3 delta Tuesday, Wednesday for 14 DTE. Generally, yeah. Especially if you can time the low, you can sell them in the money. You don't even need to sell 0.3. This is usually the period where I sell like 0.4 or 0.5 delta GME CSPs. Be careful of SLD though. Depending on the effect of SLD, like that's the only time I've gotten assigned on CSPs during this period is if I didn't plan for SLD correctly and didn't sell them with enough time on them, right? That if they went in the money, they would. So I've had them expire in the money on Friday before Opex. So yeah, make sure you have some days to expiration so you don't get just auto assigned, and then also yeah, watch for SLD. What I try to do is I try to time like the bottom of SLD and then sell them like 5-6% in the money. So like 0.6 delta. I feel like Fubo won't take as long to improve in price that we thought originally. I think there'll still be some time of price, like some time left in this accumulation period, but there may be a lot more accumulation at like the $6 level, right? So it may come up and then accumulate more before moving up again. And if you go strictly off like Wyckoff, you know, it would probably come back to like the 8 to 11 level, accumulate more there, and then we'd start to see like a significant amount of price improvement. I think this may drag on for quite some time, actually. That's why a lot of my position is shares and like really far dated calls. They're also dirt cheap. Like $5 leaps are still extremely cheap. We're still building a large Amazon put position. What price range and would be best to enter put positions like November 125? Mm. So above 132, I like entering put positions, but the last time I did this, you know, there was a big downside gap. Whoa, that's not the right one. There was a big downside gap, which, you know, it has been filled in, right? At its low, the gap was entirely filled. You may want to wait. I think there's a pretty good chance that we see price improvement across the market, at least for the next 3 days until SLD hits. So you may want to look for like the 137 level. Maybe even like into the 140s. And then obviously I would move that target up a bit. I would move that. Like if it hits 140, I probably wouldn't buy any puts below 130. Fubo's already seeing institutional interest. I'm looking for more Fubo entry on the SPY dip. Red, green, green week. You look green with a red chair and pink letters on your hat. Okay. Thanks, Toilet Wine. So October or later dated calls would be a good play with Fubo. I mean, I think it's kind of like a long-term buy and hold. Honestly, I would get leaps because the beauty of that is you can sell PMCCs against them if they do move up, right? What's up, Trina? How you doing? Why does the basket seem to be running? Is this market correlation or more basket related? I think it's mostly just market correlation. Everything's up pretty significantly. Going into this last week, we saw a pretty heavy amount of dark pool utilization across all of the stocks we watch, right? BBBY, GME, Revlon, Fubo, even some of like the bigger tickers had pretty high, well, much higher than normal utilization. And so I think with the rising market, we saw a lot of utilization get blown off and all that internalization kind of hitting the tape. Because if we look at the into the end of the week, utilization drops pretty rapidly on almost all of these stocks, which we kind of expect to happen during this period as they prep for the big options expiration. Um, so I think basket stocks are outperforming the market, but they are performing because of the market. Obviously, GME with its slightly better earnings has generated some FOMO, right? But the market is up pretty significantly over the last like 3 days. Happy Sunday, Boogie the Board. Afternoon. It's time FOMO shares on Fubo. Just saying, NFA. This is the time to FOMO shares on Fubo. It's still relatively cheap. I mean, obviously a bit above the range that I was targeting. Like I was trying to get the majority of my shares at 4. I think I was pretty successful in getting all my calls and shares in the $4 range. I still want to buy more shares, but I may wait until this like later this week. Hopefully we'll start to see a little bit of consolidation. Rev finna squart this week. I mean, Revlon still looks pretty fucking interesting, but I don't know if much is gonna happen this week. ETF FTDs from those two big run-ups, which generated very low like fail to volume ratios, indicating that some source of liquidity was available to them, are due on September 16th. We also have Opex. So I think we'll see how this plays out for both of those. FTDs were fairly insignificant through this period. I think we had like a little bit of a run with these. Might have been like the day before. Like this T plus 2 plus 35. But remember, FTDs don't really generate price improvement. They generate volatility. So it's better to look towards the options expiration and the ETF FTDs for upside. Which, I mean, technically this looks amazing. Like it's like a big bullish reversal. So I think at some point we're going to see another leg up and hopefully a higher high. We've been getting higher highs on all of these runs. I think this is due to increased retail interest and hedging of those 35Cs, which keep growing in number. I think they're at like 42,000 OI now. It's a really interesting scenario because the MM is selling these 35Cs that are fairly low Vega right now, but on a price improvement to like $10, the Vega on them jumps up to like 2.83, which is almost a 3x multiplier of their already absurd IV. And the market maker is selling massively overpriced puts to shorts in order for them to generate liquidity. And that they've put up this big gamma wall, which is kind of the same thing they did on Bobby. If that breaks or starts to weaken upon expiration or isn't cost efficient to re-enter, it's going to rip when the market maker reprices their hedge. Honestly, I'd love to see it drop really hard and give them an opportunity to cover, because I think that if they had one, if the price had sunk at all, they might actually just try to exit the position. Do you need margin for PMCCs? Yes, you do, because they're naked calls. Isn't GME up this week just through the market bouncing? Yeah, basically, Shuttle. A lot of it is. A lot of it's active fund pressure. But, GME, you have active fund pressure on top of people buying weeklies, which they bought a lot of last week, right? And that can really get GameStop moving pretty fast. Oh, and the market maker hedge hit its flip point like Thursday, right? So the market makers, hedging up as more and more positive deltas bought. Something to watch out for if you do have covered calls this week. You're gonna get, so anybody who sold covered calls at earnings, you were probably a little bit down at the end of the week. Remember that after market open on Monday, there's going to be that downtick in theta. And that's probably going to make your options that you sold profitable again, or at least much cheaper to buy back. If you're freaking out about them. I'm not super worried about 30 right now. The open interest at like 27.50 to $30 is pretty slim, and there's almost as many puts at 30 as there are calls. Actually, I think there's more puts than calls. I'm pretty sure it's negative gamma. What's the next SPY upside resistance to look out for next week? 411, and this one at 413 are very important. I guess, I mean, it kind of crossed 407.50. There is one here at 407.50, which I think I have marked on SPX. Maybe not. Is this the right? This is the wrong time frame. Hold on. Let me adjust this for the. This is really important going into tomorrow. Like this trend, a break to the upside of this. I mean, potentially, I think we could see 420. 3 days is more than enough for it to hit that price. I'd be very careful getting into put positions too early. There's, a lot of kind of good news this weekend, and this week. We have CPI, which we expect to be good because energy prices were still down and core inflation doesn't grow at a very fast rate, right? Or at least it wasn't as of the last report. There is SLD, which probably will have a negative effect. It does more often than not, but it doesn't have to have a negative effect. And there's a lot of news of like the war ending in Ukraine, or a lot of rumors about it. you know, with Russian troops pulling back over the weekend, that could have, you know, kind of a bullish effect too. So, you know, the next few days, I would say I'm pretty bullish on the overall market and possibly energy and energy prices. Also, you know, if you're in wheat, you may see a downtick over the next week or so. So if you're up, if you're in the money, it may be an opportunity to like take profits and reposition, or it could be an opportunity to get in for later on in the year. What's up, JC? I'm looking to move away from Fidelity. Can you give a brief pro and con of both WeBull and IBKR? WeBull has a lot of options available, but its UI is still extremely dated. Um, Pretty decent data access for relatively low prices. They are the fastest order execution broker. Sometimes in some metrics they're tied with Fidelity. Webull has a lot of customization opportunities. They have a lot of various levels of margin. They let you trade a lot of different products, futures, stocks. So Webull's my primary platform, but for day trading and short swings, I prefer Webull because it's just easier. You know, it's easier on the eyes. There's less management. The margin they offer is pretty good. Their order executions sometimes quite good. It depends. It can be a little worse than IBKR. Sometimes it's a little better. But it's very simple, easy to manage your positions, easy to see them. The charting's better, so it's nice to have it all in one package. But I mean, if I had to say one was better than the other, you know, IBKR is definitively better than Webull. If we get a 25% crash, Fubo downside 250. I mean, maybe even lower. Crashes get really volatile. So, like, the possible low could be way the fuck down there. Like, it might hit like 50 cents. It may only be for a few minutes, but it could hit it, right? I got 5 Rev questions. Cool, Dungston. Let's go. Are there any ETFs other than VTI that still hold Rev? Can a forward act as ownership instrument to satisfy the ETF rebalance? So they cannot carry a forward through the audit. I think except in the case where the ETF is threshold or thresholded on the threshold list. I'm pretty sure that, you know, Standards and Russell's audits of their ETFs do not count the forwards as ownership in lieu of, right? They're only good until the audit. At the audit, they have to show the actual asset, which is, you know, one of the reasons I think we see so much correlation with the Opex periods, right? And yeah, and VL cake VL. There were a couple I found that showed high correlation. Um, I sent them to. Hold on. Did I send it to Carl? Um, I sent it to Carl. So, yeah, VFLQ, SCHB, and IWO and SCHA were all showing like really high liquidity correlation with Revlon's price movements. The quarterly audit should be due on the ETF rebalance date, whatever its rebalance date is. I think S&P ETFs are the 16th, and then I think Russell ETFs are the following week. Where is GN for Rev? Gamma neutral. I don't know if JFresh has done it yet. We're working on getting it so we can look at these a little faster, but I can kind of tell you like an approximation of it. And gamma neutral is around 556, it looks like. Let me take a look at this other one, see if I want to change that at all. Yeah, 556 to 591, right in there. It's I'm just doing it like kind of in my head, but I would say it's in that range. Is there any other way for Revlon's obligations that will be effectively rolled with the forwards expiration closing out the previous open short position? Other way for Rev's obligations that will be effectively rolled with the forwards expiration closing out previous open short position on a settlement window that is not T plus 3. Is there another way? Another way for what? Can you redo question 5? Like, are you asking if there's another way for them to kick the can on them? If they've written any, which we don't know yet, right? No. I think that's what you're asking, but I'm not sure what you're asking. Maybe if you could rephrase that last one. Your thoughts on Jimmy going up after earnings versus past earnings where we were shorted? Our last 2 earnings we ran after earnings, right? We ran up a little bit after earnings in June, on June 1st, and we ran up hard after earnings in March. But I even think earnings in December we went up a little bit too. It seems like all 3 of our prior earnings, there was a small rally following the actual earnings date, and then a reversion in price at the slightly higher level. I mean, if you look here at earnings in December, we hit a low on the earnings date. Well, we hit a low at like 39, and then the next day we moved up, or before the next morning we moved up to 43, In March, we dipped, really hard into earnings, climbed up and kind of leveled off over the next 2 days. Um, you know, big volatility here in the June earnings, and then same deal, climbed up, leveled off. So I would expect that this rally post earnings will probably level off somewhere between like $30 and $26. Thoughts on Jimmy going up after earnings versus past earnings? Okay, just arrived. Did you get a deal with Marvel for the She-Hulk show? Congrats, dude. Thanks, Walford. Jimmy to drop on Monday due to settled cash settled weeklies. Probably, yeah. That's what I'm thinking. Is we're gonna see like a little bit of the effect of that skew carry over, not necessarily tomorrow, but into Tuesday. I think more than anything that'll just cause our price to chop. I don't really think the numbers are significant up or down, right? So I think we'll just chop. Like we'll have some volatility, but I don't think it's gonna create like a marked drop or improvement. Probably up and down within like a 4 to 6% range. Just chop. Thoughts on CCL for Opex? Lots of puts expiring. Carnival? Uh, um, it had like a big ish run in March. I mean, it looks good. It looks good for price improvement. I don't know how much it'll get, but this company is trash. Just so you know that. Yeah, sure. I can see some price improvement. I'd have to look at like the options chain. But I would say there's definitely some negative delta there. So it might flip. You might get some upside price action at the end of this. But maybe not a lot, maybe like $5 worth, but thoughts on CCL for Opex? Okay. Jimmy to drop on Monday due to cash out weeklies. Covered that. Why are 35 calls so enticing on Revlon? They are relatively high delta and they are extremely Vega sensitive. So if the price moves up, they move up a lot. Well, Jimmy hit the 23 to 24 range by the end of the week because of SLD. It could, yeah. 23 is a little low. I would say low 24 range would be more likely. Why is it that you guys hear that a business is failing and you immediately buy its stock? CINE. Yeah, this doesn't look good. It looks like it's gonna drop even more. Just because a movie theater is going out of business doesn't mean there's money to be made on it. Businesses go under all the time. you generally aren't bullish on that. Like, there has to be a reason to be bullish on it. SPY hedge on long-term position. What DTE do you usually do? 14 DTE or next monthly expiry? Usually like a week out. Like I'm hedging like overnight moves, right? You seem bullish on the SPY. Is that short term this week? Do you not think SLD Fed meeting after next will drop us below 400 again? I think SLD could drop us down. I don't know if it'll drop us below 4. It might drop us like 2-4 100. The Fed like forward economic predictions I think are not going to be bullish. You know, they're going to outline their plans for their aggressive hike schedule, and I don't think anyone's going to like that. So yeah, it's short-term bullish. If the SPY hits 420, I will be buying lots and lots of puts. Fairly far dated, October, November. It's like 30-60 DTE, roughly. For those who entered SPY positions too early but bought plenty of theta, does it make more sense to roll and reposition or just average down? I guess it would depend on your strikes. If you're very, very confident in the level your strikes are at, then you can just average down. Like there's some strikes that are just not worth moving. You can, follow the price action. If we get a lower high again on this brief rally, then obviously like the 405 to 395 range is probably, at least very safe for now, but adjust that as it moves up, right? So, sometimes, maybe don't average down the exact strike you have, but you can, let me try to show you an example of kind of what I did on the last rally. When it hit this level, I started buying, more puts at like 400 and 395, like 39.50 and 4,000, right? And then when it peaked, I started buying more puts here. I never got rid of these, but I started buying more puts like right below, right? So, figure you have a range that you expect it to fall through and, adjust that range accordingly for like your long-term thesis, right? So if this comes back up and tests the trend again, right? At 420, you're gonna want to be targeting like 410 to 4,000, right? Or 4,100 to 4,000. Sorry, I get mixed up when we're talking about the SPY and SPX, but and then if it moved up to like 430 again, right? It broke through. You may want to consider targeting like 4,200 or 4,150. Although on a break of this trend, I would be I would be cautious entering more put positions. That's a point at which you probably want to consider repositioning or taking the loss. Does IBKR let you directly trade VIX options? Yes. TDA does too, I'm pretty sure. I don't remember what the ticker is. It's got a different ticker. It's not just VIX. It's like VIX dot something for TDA. So close Rancher October puts entered recently, or hold if you don't care about getting a better entry, or close because they'll expire worthless. Most close to at the money. I mean, you have to manage your own position. I can't help you with that, man. I don't know what your position is. First of all, I don't know when you bought the options. I don't know how much you're down or up, or if you bought them Friday for this like low trend test, um, then that could be very easy to exit with minimal losses as you wait out upside. Yeah, so I don't know. So I can't tell you because each options position is unique. Do you see SPY breaking that upward trend? Do you not expect SPY to crash down to 360 or beyond this year? Towards the end of this year, yeah. I don't know if we're going to see 360 right away. I think our best chance to see something that low would be after the Fed meeting, but there's no guarantee of that, right? I mean, I think the market's well aware that the Fed is going to have aggressive hikes. And pricing down back to that level may require, the all the mega caps pulling back on their, margins and expected earnings over the next couple of quarters. And I think we'll start to see a little bit of that in like the quarter 3 reports, but we probably won't see the majority of that till like quarter 4 reports. And then depending on what kind of rate hike the Fed does, whether it's 7.5 or 1, I mean, that'll have a pretty drastic effect on potential downside. Like if they do 1, we could see maybe like 380 again and maybe a little lower. Brett and Real Slim Pickle, thank you guys for becoming Dillionaires. I appreciate it. Hit me up on the Discord after the stream, and I'll get you added to the country club.
Yeah. Yeah, we might have a chance, but we ain't got ropes. Give us more than a chance, cause we ain't no coke. Get the cash in advance, cause we hold it the float. If you are what you eat, that makes Dirk in the go. Hoping that you read the DD, cause when the shit squeeze, we go end up with the moon, man. Racks to the 510 weeklies, while I'm selling CCs like another fucking moon win. Praise be to RC and the VWAP, please, cause I need G and me to move soon, man. Got the man GG on the CNBC, saying that he ain't seeing no collusion. And we might be apes, but we ain't that Joe. Motherfucker, trades, this is popcorn code. When the Citadel fails,
Based on historical data from the 4-year election cycle, midterm has always been choppy. Some analysts think that we'll see bullish upside in the next June. What are your thoughts on this? I think politics don't move fast enough to affect the markets. I think drawing correlations between the two things, except in the effect of political news directly on the market, is a mistake. Like, if a bill's passed or something and it directly affects a set of companies, sure, you might see upside on them for like a day or two as, people FOMO in. But ultimately, I think there is no political effect that will move or be realized in pricing in the market quickly. And definitely not bullish upside into next June. I mean, we have companies that are still trading at like PEs of like 118, 50, 20. That's unsustainable right now. And we're going to see those companies start to pull back those expectations and, very likely soon. And when that starts happening, a lot of value is going to be lost in the market. Like Tesla can't sustain a PE of like 111 right now. You think we see XRT on Reg Show this week? I would laugh my ass off if it goes on Reg Show on the 16th. Let me rephrase. Close close to at the money puts October monthly because they will probably expire worthless, or let them ride if I don't care about better entries. I don't think they'll expire worthless if they're like at the money right now, but you could get a much better entry opportunity at like 410 or 420. You know, if you have like 405s that you bought at 406 or 407, you know, you're not even really feeling any pressure on them yet. And October is a decent amount of time. I mean, it carries you through the SLD and the Fed meeting. If something resembling a crash or hard downturn or whatever happens in the market, how do you see GME reacting to it? It'll drop like a fucking rock. Do you think we could see new lows? Possibly, yeah. I mean, if you're talking about a market crash, you're going to see new lows on everything. Opex is on the 19th. No, there's no holidays. Any price predictions? 10 to 15% above whatever Gamma Max is on Monday morning. And then Tuesday morning, and then Wednesday morning. Well, Dunstan, there's a possibility that forwards written in the August period are not due until December. So they may have written forwards beyond October 13th, or like beyond the rebalance. But to get through it without price action, or they could rewrite them after the audit. I mean, you would still see a run, but maybe not the full extent of the run. So they go through the audit and then rewrite them, like cover, and then rewrite forwards out, like bring the price back down. So maybe like a rally to like 11 or 12, right? And then, you know, slam it back down, rewrite them out beyond the October 13th bankruptcy or like listing hearing, the NYSE listing hearing. I can see them like try to kick it essentially another cycle. I think if they do that though, we will see price improvement, like a decent amount of it. I mean, it's kind of evident that they've been walking forward that position since June anyway. Yeah, there may be extensions available due to the delisting hearing. 15C3-3M, yeah. I could see an extension. Then I mean that's why I'm buying shares and leaps, right? Because I'm not fully sure that there will be any significant covering event until after the delisting hearing. Like obviously they're trying to maintain the position until that point. Because if they can clear an OCC, like here's the thing though, if it gets delisted, it'll probably still run, right? Because if it gets delisted, that gives them the liquidity to exit their positions. And it can run after being delisted. I mean, the price isn't low enough for them to like seller box it, right? It would be the first time a stock squeezed after being delisted. What's up, Casper? SPX, do you think the primes are pumping the index to shape the Fed's monetary policy? If so, do you think they really want to push it to 4,200 to bait more severe rate hikes at the FOMC meeting? Interesting. I mean, the primes benefit in the short term from the increased rates, but long term, it's bad for them. That's a really good question. No, because I mean, they should be afraid of the Fed rolling off their balance sheet, right? I think the biggest problem we're seeing, especially with the lack of liquidity in the market, is that, you know, primes aren't really buying a lot. Like this would be the time where primes would be buying up equity, like just as many equities as they could get their hands on, and they're not. And I think a lot of that is because they have so much liquidity and it's more beneficial for them to just overnight it in reverse repo than it is for them to go out into the market and buy equities. And I think the lack of them buying equities is keeping the Fed from rolling off their balance sheet, because if they start rolling off their balance sheet at the rates they need to, even just to catch up, they could trigger a sell-off, right? And so I think a lot of what we're seeing in the market is primes just repositioning options positions as they remain, you know, relatively cash solvent, or, you know, cash liquid. So they're keeping all their cash on the sidelines and waiting. And eventually, I mean, it's a standoff, right? But like eventually one of those sides has to break. Either, you know, the primes fall too far behind in equity pricing and need to start buying in because the market's rallying, or, and that gives the Fed the opportunity to start shedding their balance sheet, or the Fed is just going to capitulate and start shedding their balance sheet, and the primes are going to be able to buy at the bottom. But right now it looks like the majority of money is just going into, you know, massive put positions that get rolled forward every few weeks, and, you know, the market rallies on the puts and, you know, just walking it down slowly, but it keeps going down, right? Are we seeing what we normally see for Opex runs? It's very good. So far, everything is very in line for a solid Opex period. And, you know, this Opex, and I know it's super speculative, and I try not to talk about it a lot because it's very theoretical, but I do think that, you know, if there were overlent positions in ETFs, that this is a period where we are going to see covering of that. And so it may be a bit more than our standard Opex run. I know that a couple of Turd was pointing out a couple days ago that a few of the ETFs are not even showing like a post split balance change on their GME shares, which adds a little credibility to that theory. So like some of them are still showing the same amount of shares they had before the split. If that's the case, you know, very exciting at least. For this week, I'm looking to get some call hedges for my Amazon puts. Looking at SPX calls for this week's upside exposure. Would you look at 14 DTE or next month? I think 14 DTE should cover most, if not all, of the potential price improvement. If you're doing that though, short dated, you try to make sure that, you know, you're at least near the money on those, because that way, you know, when they go, if they go in the money on a rising market, you know, you're gonna offset that theta decay a little bit. So you have a short dated call, the theta is gonna decay quickly. If you're at the money and the price rises a little bit and you go in the money, you know, your theta decay is gonna slow down, essentially. That's versus buying further out of the money where you may have multiple days before they go in the money. Yeah, when I look at CAT, I look at the Dow. What date strikes are you getting for Opex? October 21st, 0.3 to 0.05 delta, probably. I might pick up some like Jan 24 100s or something like that. Or 60s, 80s. Did I miss a Ko-Fi? I might have missed one. Thank you, by the way. I haven't started buying call positions yet. Okay, no, I got them all. Never mind. So the SPY is more liquid and spreads are better. But right now, with all the options positioning on SPX, I feel SPX is the better thing to trade. So if I have really high confidence in market moves, I will trade SPX, but I will also trade it when I have lower, like when I have lower confidence, like if I'm unsure of direction, SPX straddles are far more reliable in offsetting the cost of the put hedge or the call hedge, right? Like the offset leg. You're more likely to print enough value on a move on the SPX than you are on the SPY. But I mean, they're relatively similar. Also, SPX is tax preferred. Don't forget that. So when you sell a short-term position on SPX, it's taxed at 60% long-term holding, 40% short-term gains. I'm having trouble finishing my evolution to Dillionaire from Lurky Lurk. Don't send help, just cues. If you're unable to get in, just DM me on the Discord and I'll try to help you out, Manic. Someone asked about Carnival. You said you would have to look at the options chain. Just wondering what things you were looking for in the chain. I have no interest in Carnival, just your methods. I'm just gonna look at like put and call positioning going into Opex. And see if, you know, it kind of lines up with our expectations that we have for like GameStop and other stocks. I'm not playing Carnival either. I have no interest in it. But I'd probably want to see like a net negative delta hedge. And it's been rising over the last couple days, so it may not be the case anymore. I'm still waiting to sell Jimmy Rev CCs. Okay. This sold Fubo when we were about 347. How do I not make this mistake with Jimmy and Rev? I mean, selling Fubo cover calls at 347 wasn't necessarily a mistake. You know, you received premium for them. I'm assuming you sold $4 calls at 347 and not 350s. Generally, I mean, you don't sell your covered calls that close to the money. You would sell them at, you know, point like 3 or great or less delta, like 0.2, 0.1. you have a much lower percentage chance of them going in the money. If they roll Revlon obligations past the delisting hearing, that would cause upside. Yeah. Wouldn't that stress the 35C exposure? Absolutely. Yeah, I mean, if they roll it and we see another big volume event, that's going to not only stress their 35C exposure, but it's going to create another situation where puts wildly skew in price versus calls and present like a huge opportunity for selling CSPs again. So yeah, look out for that. I mean, also, what is the rev upside pressure on 916? FTDs or ETF obligations? Both. They both fall in the same period because of when it ran. So we have ETF FTDs from that big run at the beginning of August that come due on September 16th, and then possibly Opex exposure. We just don't know yet. We don't know how exposed it is because we haven't had a period like this yet on Revlon. I would expect that they're trying to roll it forward the same way they did on GME. And if they do, over the next quarter, we're going to see more likely than not even more compounding FTDs. Which, you know, if we start to see an even higher rate of fail to volume or a higher fail to volume ratio over the next ETF or like FTD accumulation period, then that really lines up a lot with like GME October 2020 to January 2021. So just blowing off pressure in the Opex period and maintaining their exposure over time. I think if Revlon stays listed, there's a chance they try to close their position. So, you know, it's risky to buy short dated calls on Revlon outside of like intraday price moves. Activist investor, welcome to Dillionaire, man. Thank you so much. Hit me up on the Discord. I'll get you added after the stream.
Happy birthday, Gert. Yeah. Yeah, we might have a chance, but we ain't got rolls. Give us more than a chance, cause we ain't no cold. Get the cash in advance, cause we hold it.
I mean, if it's delisted, it just gets moved to OTC. It shouldn't be harder to sell shares or contracts. I think the chances of Revlon getting delisted are fairly slim right now. Fed actually did roll off a little bit of their balance sheet on September 1st. Just not nearly as much as they need to. And you know, I think we dropped in line with that. Like, I think they might have used this smaller rally to offload a little bit of their balance sheet. We have some auctions coming up tomorrow. We may see some downside due to that. But yeah, I agree. They should have taken advantage of that high. And they keep falling behind. In January, the rate of roll-offs is supposed to double again, right? So it doubled for September, and now it's supposed to double again. I fucked up my camera somehow, trash. I don't know what I did. I didn't have time to fix it. Trading the VIX also tax preferred. I believe so. I'm not positive on that, but I think it is. Is Wyckoff still a thing? If so, where in the cycle are we? I don't know. I still, like, we would still be in accumulation, but we would be accumulating from a higher point. So possible move into like phase C. I would say that we see accumulation and distribution cycles on GME, but it's like I think they happen very rapidly. I think we see institutions accumulate very, very quickly and then immediately sell off because the price is significantly above any real valuation. So when we hit these lows, I think we start to see institutional interest pick up. But I mean, that goes all the way. Like if you look at each Opex event separately, they look like accumulation periods, right? Like the dip into Opex and then Opex and the revaluating of price, and then we distribute out and the price comes down. But a lot of that's also just NYSE's DMM efficiency is like if you look at NASDAQ stocks, when they rip, they tend to like come right back down to level. And on NYSE, when stocks rip, it takes quite some time for the price to get walked back down. And that's because like the internalization on NASDAQ and like with the supplemental liquidity providers and the DMM is automated. And on NYSE, it's run through like Goldman, Virtu, and Citadel. Which it's really easy to see if you look at like the run on BBBY, right? Where it just like goes up and then comes right back down. By the way, out here in this settlement period, BBBY looks interesting. I'd be interested in BBBY here. I'm not super interested in whatever it does this week, but into Opex and these like, this is the ETF FTD period. This I would be interested in. I don't think ETF FTDs are particularly high, but I'm very curious about September Opex on BBBY. It may see another run, and God knows there's a lot of call interest, so Gamma Max can rise really, really fast. I haven't started buying calls yet. I probably will soon. IV came down into close on Friday, so that's cool. Thoughts on Tesla going forward? Almost at 900, please pre-split again. Well, if Tesla has the thing again where it runs for the ETF period, I think that'll be December. For like overlent shares. If we see like a similar thing to Tesla's previous split, that'll be during like the December Opex. I think this will rise through Opex. Maybe a retest of like the 305 level, I think, before falling off post Opex into like October. Like early October, mid October, I think we'll see a decline in price on Tesla. Probably out through November it'll stabilize, and then more down like and then the upside in December for the any ETF obligations. They split via dividend also, right? Again. Why does rolling of large put positions cause upside? Because the market maker deleverages their hedge. And if you have enough puts closing, yeah, it's just de-hedging and hedging. It's, just volatility mostly, but if it's short side, then, it causes a rise in price. Long side, it causes a drop. And we see it all the time when calls capitulate and stuff. The market isn't supposed to be moved by options, but when everyone's just buying options, that's what's going to move the equities. Because then the only person actually transacting the shares are MMs. Fubo does look great. Well, Rev squeeze if delisted. That's possible. They just, I mean, the options don't disappear. You don't have NYSE options. They're through CBOE. You mentioned your dividend boom report. Care to share details about it? I posted it. It's in the value investing channel. Well, I posted most of it, at least what I had in one broker, but it's not passive. I actively manage it quite a lot. I prefer covered calls to dividends. I do have dividend stocks, but not a lot of them. I think like the net yield on those is around like 3% a year. But I have a lot of positions that I sell calls on. But the yield from selling covered calls is far better than the yield from dividends. And it's worth the time it takes me to sell, 30 DTE options every couple months or every month. You suggest ways to set trailing stops cleverly. I don't know what you mean. Trailing stops aren't very clever anyway. They're just something that you need if you have like a full-time job and you can't watch your position. Trailing stops, I mean, like if you're actively managing, are terrible. We're looking to identify an Opex peak sometime between 916 and 921. No, that's not how Opex works. We're looking for large volume and price improvement between 916 and 921. And really 919 and 921. That then begets more price improvement as in the money calls are hedged and the market maker buys to the upside. That price action on sufficient volume will generates higher highs. So generally, Opex is high volume, but not a ton of price improvement, right? So it's like 3 days of high volume, putting all these calls in the money. Yeah, it's easier just to show you on the chart. So this is Opex covering here, right? And then T+2 later, that leads to the market maker hedging calls, right? Which leads to more call buying. And then all these calls go in the money, which leads to more hedging, right? And this can go on for quite some time. And generally you'll see after like T+4, you'll see a peak. And then usually the highest high is T+2 after that. So you really get a period of like 6 days after the initial Opex covering, provided it has sufficient volume. Sometimes it's much shorter, like on a lower volume Opex, like we have here in May. The initial covering into the T+2 peak, and the second peak came very rapidly, right? So this is the initial volume. This is hedging volume, and then you get kind of a delay and then another rise. And this actually like carried out into here where we get the highest high for the cycle. I mean, the best thing to do is try to set your stop, like your trailing stops at a resistance. That way, if it falls, you get stopped out. set them tight at a resistance, and then if it rises, you follow the price action up even further before, you know, a pullback. What makes you bearish on the housing market in the next 6 to 12 months? Increased supply. I mean, increased supply and lowered demand. Also, the fact that the housing market is now like price appreciation in the housing market, or price discovery in the housing market now occurs much, much faster due to platforms like Zillow, Redfin. You know, not only does it expand housing markets beyond their local buying group, it means that, you know, price realization across the entire market occurs much faster. A lot of the advantage in the housing market to the equity market previously was that price appreciation was very, very slow, and so it's, you know, it was not volatile. But volatility is going to pick up with faster and faster price discovery. So, you know, 20 years from now, you might be trying to like time the dip on the housing market. Like you'd be getting like pre-approved and then waiting for a dip. I'm not kidding. Like the faster the price discovery, the, you know, the more volatile that market will become. But yeah, people are getting priced out of loans. Interest rates are going up. You know, more and more people are trying to sell the top, which leads to increased supply, which lowers the overall value of all of the assets in that market. Basic economics. Oh, that and the cost of everything is rising. So, you know, buying homes and cars is going to get put on a back burner. And then also the default rate for commercial mortgage-backed securities is rising. Um, and when those fail, those like private REITs and you know, large corporate property ownership loan packages fail because they do have variable rates. That dumps tons of supply into the market very, very rapidly. Um, and you know, with the rising rates, it's harder for them to sustain ownership. Normally, something that very rarely has a default rate at all. Any good opportunities up to coming up to pick up Fubo shares? I would say Fubo is increasing faster than I expected it to. I don't know if there'll be other opportunities to get in at the low. There may be some opportunities to get back in at like 330. But right now, you know, it's climbing quite fast, and institutional interest is picking up. Periods of consolidation or large market downturns will probably be, you know, your best bet for trying to get shares cheaper. But you may not get an opportunity. I can't say that you will or you won't. To get back in that price range. Remember, I mean, if the stock goes to $13, you don't care if you bought it at 450. Far dated leaps are still very, very cheap. So there's still plenty of opportunity there. It hasn't run so much that, you know, people are priced out of it. Someone who worked at a market maker for 5 years. Yeah, they're not going to probably tell you anything you don't already know. I would imagine if it's legitimate, they're not going to be confirming any biases. Also, you can't link in the YouTube chat. Looking for some data to consider when selecting dollar or percentage. How wide on lower volatility stocks? Oh, on lower volatility stocks? I mean, it's going to be based on your own positioning, Steely. If your option's up, you set it within your profit. Like, ensure that if stopped out, you will still get profits. If you're just entering the position, you would set your trailing at your defined risk. Like, you define your risk before you enter a position and then set your trailing at that risk level. Yeah, no problem, Tim. You mostly sell 30 DTECCs, weeklies, or both. It depends on the stock. GameStop, I sell generally weeklies and 14 DTE. Occasionally, I'll sell slightly more than 14, but not 30. Other stocks, some of them I sell 30, some of them I sell 60. It just depends on how much I want to manage them. But generally, selling within that lower theta curve increases the chance that you don't get assigned, or at least if you have to buy back, it's much cheaper. Because you're selling theta that's decaying more rapidly. If you sell 60, 90 DTE, you're selling theta, and sometimes you need to. On some stocks, they don't have a lot of volatility, and you don't really have a choice. You need to sell larger amounts of theta. But I try to avoid that. I try to avoid owning stocks where I have to do that. Because, it exposes you to risk for a longer period of time. I have a relative who runs a real estate hedge fund, rhymes with hiking mobile. Says the housing market will absolutely crash this year. Yeah, I believe him. Mojo FOMO, welcome to Dillionaire, man. Thank you so much. Hit me up on the Discord. I'll get you added after the stream, dude. Thoughts on Cat for this week? Pretty bullish for a couple more days. I still have my calls. I know they had a big sell-off into close, but I'm feeling pretty confident on a move past 389. My calls expire Friday, but they're pretty deep in the money. They're 180s, so even if it shifts down into tomorrow, I'm not super worried about it. At this point, I'm just being greedy. But I think a test of 190 is possible. And maybe if the market really rallies, we could see a bounce up to the 193, 195 level before coming back down. So that'd be awesome, obviously. But yeah, it's at PT. I mean, I'm ready to sell on any sign of a turnaround. Like if you guys were in this play from Pickle's picks last week, this was the time to buy all through here. And obviously it shot right through mid and into, it hit its price target. So if you'd exited Friday, there's nothing wrong with that. I do think there's some more room to the upside. Far dated leaps right now means Jan 24. Yeah, that's what I've been buying. I have $5, $10, and $50 calls for Fubo for Jan 24. They're very cheap. I don't see a reason not to buy them. It's much cheaper than share leverage. I now have roughly 12,000 shares of the underlying, and then I also have $5 and $10 leaps for Jan 2023 as well. But those are more if something happens in the near term or it picks up volatility. I'm just gonna sell those. I'm not holding those to exercise in the future or anything like that. The $5 24s, definitely holding to exercise or sell PMCCs against. And then the 10 and 50 Jan 24 is also kind of like an IV play. like, or you know, short-term price improvement play. If Fubo rises up to like that $11 level and holds, then obviously, you know, I'll hold on to those Jan 24s and sell PMCCs against them as well. Should I pull back my Fubo 4.5 Cs for 9/16 first thing Monday morning? Wait and see if SLD keeps it under 4.5, down about 20%. I think you could probably wait. I mean, they're not in the money right now. And you know, that out of the money theta decay could save you. They can't be very expensive to pull back, I'd imagine already, but yeah, I'd probably wait on SLD. Because even if they slip, it moves up to like 475, $5, they're still fairly cheap to buy back. Or you just get assigned, right, and look for another entry opportunity. Is there expected Fubo action on 9/13? T plus 235 from A5 volume, if I have the dates correct. Is it? From this volume? This isn't really very significant. Sure, there could be, but probably not. Fubo's really liquid. It's kind of like BBBY. I wouldn't expect there to be significant market maker fails. At least not enough that they would be marked long, carried out 35 days, and then remember that market maker fails and liquid stocks aren't very relevant. They're usually cleared up within a couple days. They very rarely mark long. And when they do, it's generally on extremely illiquid stocks. Like GME at the peaks of Opex. You know, Revlon has some of that T plus 2 plus 35 action. Like, you really need something super illiquid for the market maker to need to take advantage of Reg T. Now, on the ETF side, those aren't security settled fails, they're cash settled. So they always extend to the maximum amount of time because they don't give a shit, right? They're just going to cash settle them all at once. But market maker fails, like, if anything, and they're generally net long, so if anything, they create like volatility to the up and down side, but not price improvement. I think we've found this out more than enough times, even on GME, which is fairly illiquid, where we've run into T plus 2 plus 35 periods. We've seen higher volume, we've seen, higher volatility, but we haven't seen any significant price improvement. Whereas like ETF FTDs have a high rate of creating price improvement because they cash settle the FTD and then the ETF just goes and buys the stock. They don't care, right? They just go to the market and buy it. Selling CCs is a classic example of you have to have money to make money. Yeah, but it's easy to get started doing, right? Like, you can pick a stock like Fubo and, return 3% on your initial investment of like $400 every week, right? And then, compound that. And if you're young enough, at 20, 21, that could, even that initial $400 investment can beat the market year over year. And the compounding off of that initial, and then if you're reinvesting on any kind of regular schedule, you will perform much better selling CSPs and cover calls than you will, trying to, like, you're probably even better than buy and hold, honestly. I'm old. Yeah, that's fair. It's a grind, but if you do have money, then yeah, you can make a lot of it really, really fast. Obviously, your rate of compounding accelerates, right? Like I've sold about 500, 600 covered calls on GME last week, and it's enough, premium to buy, well, a lot more shares. I don't want to do the math right now, but so like, because my position is larger, yeah, my rate of compounding is very, very fast. I sold, it was like 600 at, I guess the average was about 80. Divided by the current share price of GME. So I could buy another 1,600 and roughly shares every week. Risking just a small percentage of my portfolio. Once it gets to the point that you can sell a week or two of covered calls, it's enough to buy another 100 shares. Your port will grow exponentially. Yeah, there's definitely a like a logarithmic gain. You could probably do it with compounding and like chart it. I don't want to, but Carl could probably do it. He loves doing that kind of shit. I know he drew up a chart for it one time for like compounding GME cover calls. I'm not that old. I'm not that young either. I'm squarely in the middle. Will GME touch 30 this week? Maybe. I don't know. It had some really, really weak support at like 28 to 30 on Friday. And with weeklies selling off, it may drop. Or at least stabilize just under 30. Don't get me wrong, that gives people the opportunity to buy in at $30 calls, and that can pull the price up, but we'll have to take it day by day and see how much like options interest picks up. I don't know if Fubo's likely to run with Opex or not yet. It shouldn't. It hasn't for a while. Like, it hasn't shown significant Opex and price improvement since like November. I think March it ran a little bit, but it was kind of weak. Where's March? Yeah, March was here, and it ran like 40%. But I mean, for options, it's not great, right? It moved from $5 to $8. So it'd be interesting, like, back here it had really, really good OPEXs, right? So I'm interested to see if like the new increase in volatility is going to lead to large amounts of price improvement during OPEX periods again. I kind of feel like Fubo is a good candidate to get spun back up into those short volatility cycles. And if it does, I mean, obviously, like compounding gains from covered calls and long options on it are going to be very profitable for quite some time to come. Only me finding it funny with all the people in GME chat asking for a pullback now when it almost went down to 23 this week. Yeah. I mean, I don't really care when I buy into the options positions. Either way, I'll probably make more money selling covered calls at the top, but yeah, it's funny that everyone's like always looking to buy the dip and then they don't buy the dip because they're greedy and waiting for it to be cheaper. Capture a full downside move on the back of a true GME Opex. How far in the money would you want to sell CCs? I generally don't sell them more than like 10 to 15% in the money. So on a test of like 45, you know, I'm only selling them like $4 or $6 in the money. We were expecting an earnings dip. Fair, yeah. Earnings were better than expected. I mean, there was still IV crush. I mean, the IV's still crushed. That's the thing, is IV's still really cheap, right? So it doesn't, nobody's really missed the entry. You know, was there a slightly better entry? Sure. But are you maybe better positioned confirming it? Probably. You don't always have to have the best entry. Sometimes it's better to have a confirmed entry. Like, I'd rather buy 35s, 40s, 45s at a break of 30 than I would below 30. Some people don't have the money to do that, which is fair. Some people really do need to hit that low entry. I understand. Don't get me wrong, it's great when you hit it and everything works out. The problem is when you hit that low entry and it doesn't work out, and then you've held your theta for that many more days. I said selling CCs at the top. How do you know when the top is forming? It's not very hard, right? You break gamma max, you can only go up so much from there. I mean, you can look at gamma exposure and, you know, see how many additional T+2 rolls are likely. Even just like look at VWAP, right? Like our longer weighted VWAPs. Like if we break the top of like this year's weighted VWAP, right, which is this lower band, you know, if we break 39, it's extremely likely that within, you know, some period of time less than 14 days, we are going to end up below this again. And more than likely that we are going to return to like 32, right? October 60s, Jan 100s. I haven't decided yet. I'll dig through the options chain and see which ones I like. Either one of those are possible, though. I like leaps better because they cling to the IV a little longer. Shorter dated ones, the price volatility on them makes them harder to sell. Yeah, some people prefer, I mean, there's really two ways, right? You can try the low entry, long theta. Or you can try the high entry, short theta, shorter theta, longer, shorter. The beauty of this one is it can be carried even if there is no Opex. Right? Like this could just see price improvement no matter what. So this one's much more risk averse. This one obviously offers higher leverage and is far more profitable if a run occurs. The risk with this one is that if no run occurs, you know, you will take a loss. You should specify that MOAS isn't going to happen out of nowhere, just in case when talking about identifying the peak, yeah, I mean, well, Gamma Max climbs. If Gamma Max keeps climbing, you just don't sell. If Gamma Max is rocking up like 20% a day, you just sit on your calls, right, and wait for it to cross. And look at what happened in August. We crossed Gamma Max with the August ETF FTDs, right? Here, and the price cannot stay above it. It can test it a couple times as it comes down, but it cannot sustain above Gamma Max. So, Gamma Max climbs with the run because people are buying out of the money calls. But eventually people get priced out of the money calls because IV is constantly going up, right? And when the rate of out of the money call buying slows, Gamma Max levels off. And then the price can only move so far beyond that before it collapses back down. Because the market maker starts selling, right, into the positive price action. Like we see on BBBY when it hits those resistances and then the MM sells into it. And then it hits it and they sell into it. Same deal. And we even saw it on GME when, like, the gamma flip point on Thursday, it kept like running into it, and then the market maker was selling into the rising price because they flipped from being short puts to short calls. Yeah, no problem, Jenny DJ. It's going all right, Ryan. How you doing, man? I'm just doing well, I'm green. I'm just fucking irritating, but just talking stocks. I'm not sick. No, I just messed up something on my camera and I don't know how to fix it. So I'm gonna reset it, which I didn't have time to do before the stream started. I'm gonna reset it and then it'll be normal. Is that it? Have I exhausted all the questions? All right. So Dillionaire's Pickles Picks will be out at midnight, 1 o'clock tonight. Thank you guys so much for all the support. I appreciate it. And I hope everyone kills it again this week. Can you go into more detail about how to start selling options on my shares? Yeah, it's not really hard. You pick a strike and you sell an option. Ideally, if you want to keep your shares, you pick a strike that is unlikely to be assigned. And then if you don't want to keep the shares, you pick one that is likely to be assigned. It's really that simple. I think people overcomplicate covered calls a lot. They're pretty easy. All right. Thank you guys so much. I'll see you all tomorrow. Have a good weekend or rest of your weekend.